Well, now that you have a plan about what you want to do, how are you going to pay for it? Unless you have a huge amount of savings, you're going to need that loan. So here to tell us about how that process goes is Greg Welch, Vice President of UMB Bank. Welcome, Greg.
Thank you. Thank you. Thanks for having me.
Well, is it hard to get a loan these days for home improvement?
You know, I don't think it's any harder today than it's been historically in the past to get a home improvement loan. I think the challenges that most folks run into are going to be, you know, a consumer confidence, if you will, into what's the value in my home. You know, is there enough room in my home to do a home equity loan? You know, I think credit guidelines you'll find have remained relatively the same. You know, over the past number of years, and you know, you still have to have a good credit score, you know, good source income,
so
low
maybe
debt to income.
Before they even start thinking about it, they should check their credit score.
Definitely,
and when
I would
you
definitely
say
recommend
good
that.
score, what does that look like?
Well, you know, every bank, every institution is going to have their own range, if you will. But you know, I think typically speaking, 640 and above is going to be an acceptable credit score. 700 and above is going to be a good credit score.
Yeah.
So. Definitely. But yeah, before you begin the process, I would recommend that, you know, you go out. There's several different agencies. You can go directly to the credit reporting agencies and get a copy of your credit report, look at it, make sure it's accurate, make sure the information on it is, you know, is true, see what your score is. And
Yeah, because there could be something on there that is really not yours that's pulling the score down.
Exactly.
We should be doing that anyway
You should
on a
be.
yearly basis.
I agree.
Okay.
Definitely.
So we've decided what we want to do, and we have our score. So it's and we know about how much it's going to cost. So how do we decide where we're going to try to get the loan?
Well, you know, I'm a big believer in relationship banking. And so if you've got deposit accounts at a bank already, I would probably start there.
Okay.
You know, go in and see your personal banker. Talk to them about what their home equity products are. Everybody's products are going to be relatively the same. You know, there might be a few bells and whistles here or a few bells and whistles there, but I would start off with your current bank and talk to them about their product, talk to them about their application process, what it is that they would like to see. You know, typically you want to, you know, taking copies of your W-2s and, you know, your most current pay stubs and things like that to verify your income and take it from there. The application process, I think you'll find, will probably be relatively easy. You know, the turnaround time should be relatively quick.
Okay.
The longest barrier in the whole thing is probably going to be just getting an appraisal ordered. That's going to take, you know, that could take a week to 2 weeks to go through that whole process of getting the appraisal done and finding out what the appraised value of your home is and then getting closed. So.
Okay. All right. So does it matter how much equity you have in the home? Would that influence it? Probably to some degree.
You know, it does. And there's again, every different bank is going to have their own different guidelines. My personal thoughts are you really don't want to go above 80% loan to value. Now, there are, you know, institutions out there, there are places out there that go 90% loan to value, 100% loan to value. Several years ago, there were companies that would even go 110, 115% loan to value. But
yeah, we know what happened there.
Yeah, that's for sure.
We're not going there again, right?
But personally, I wouldn't go above 80% loan to value on your home if you're looking at doing a home equity. You know, and that's going to be your first mortgage plus your second. What is that to the value of your home? And you don't want to eat up any more than 80%. That gives you some smudge room. Should something happen, should you need to sell your house, now you've got a little room to negotiate if you need to.
And we hope it doesn't happen, or if the value goes down again.
Exactly, if the value goes down again. You know, I think that's one of the biggest challenges that we have in this market is just consumer confidence in the value of their home. You know, you see so much media, so much bad press about home values dropping, and that's true in a lot of markets in Florida and Nevada, Arizona, to name a few. But here in Colorado, our actual home values have remained relatively stable. You know, they might be down 3 or 4%, but yeah, we have been. And so, don't be afraid to go out and try.
Okay. So what I hear you saying, Greg, is go talk to your personal banker. Tell them what your situation is. Show them what you're making, how much money, how much equity you have. And then talk it through and see if it's really a good decision.
It is, definitely, definitely.
All right.
You know, there are two different products that you're going to look at, either a home equity line or a home equity loan.
Okay.
Home equity lines are more the typical product. You're going to pay interest on it monthly. It's going to have a 10-year life.
Okay.
The only thing I would recommend is if you do a home equity line, once you get your construction done, get your rehab done, don't make just interest-only payments on it.
Right.
You know, start knocking away on that principal as soon as you can.
Okay. Great advice. Thank you.
Thank you.